Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Japan leading losses in Asian stocks with investor fatigue setting in over lackluster tech earnings ahead of the U.S. jobs report out later Friday. China remains a weak spot for Apple, helping send shares lower in extended trade, but Amazon and Intel both gaining on bullish outlooks. Also ahead, we dig into a new IMF report which finds Asia-Pacific growth is still expected to moderate into next year, although short-term prospects are now more favorable. And Donald Trump claiming he's the clear front-runner in the election race, while Kamala Harris goes on the attack over his views on women. We'll get insights from Brookings Institution Senior Fellow Nicol. All right, in the markets, investors pretty much mauling the disappointment from Meta, from Microsoft. Some say perhaps it is time to take some money off the table after that massive rally we saw in the last 12 to 18 months. Taking a look where we are in terms of the S&P futures, currently down about 1/10 of 1%. NASDAQ also pointing to a higher open. Bear in mind that we saw how those benchmarks were under pressure, down by about 2% each. We have markets digesting those U.S. tech earnings. And speaking of tech earnings, Intel in play, bucking the trend. Its stocks were pretty much higher post those numbers. In Asia, we're seeing some trickle-down effect, of course, those chip makers in focus on the back of the disappointment that we saw from the likes of Meta as well as Microsoft. CSI 300 index, though, bucking the trend, up by about 0.9 of 1%. We're seeing latest data suggesting that perhaps the stimulus may be taking effect, that we may just see that turnaround in the Chinese economy. The Hang Seng also getting a lift, higher by about 1% right now. Nikkei futures in the opposite direction, currently down about 2.5%. Of course, front and center, the yen, 152.28, reversing that 1% gains we saw earlier today. We had a hawkish BOJ suggesting perhaps we'll see the rate hike later in the year, but not enough. The dollar pretty steady, weighing on that currency right now. Now, for a closer look at Asia's economic outlook, the IMF has boosted its forecast for the region's growth this year to 4.6%, slightly higher than its last reading in April. Exports have picked up for the entire region, especially demand for tech products, but domestic consumption is more of a mixed bag between Asia's emerging and advanced economies. For more, the Asia Trade co-anchor Sherry An is standing by in Tokyo. Sherry.
Thanks, Haslinda. We're now joined by IMF Asia and Pacific Department Director Krishna Srinivasan. Krishna, great to have you here in Japan. You, of course, just released this outlook, but you're also saying that there are risks to the downside. Why?
So, Sherry, just to back up a little bit, so we have growth at 4.6% this year and 4.4% for next year. And we do have significant risks which we need to watch out for. One, of course, is external demand could be weaker than we expect. We have US slowing next year, and we have China slowing next year. The question is, of course, will they slow more than we expect? And the other big risk is fragmentation. We've been talking about geoeconomic fragmentation, which has been with us for some time, but whatever it takes for different proportion going forward, that could be a significant downside risk. And finally, we have China, where growth we have revised down to 4.5% for next year. The question is, will the property market bottom out, and will that provide support for the economy? And there we could have significant downside risks beyond what we expect.
I want to get to China, but on the geoeconomic fragmentation, how big is the U.S. election risk?
So, again, this has been a trend for some time. In 2019, we had 1,000 trade restrictive measures. In 2023, is 3,000. And 2024, it's going to be a bigger number. So this is a trend which has been happening for some time. And the question, of course, is what will the future hold for us. And what we say in this report is that any kind of intensification of geoeconomic fragmentation will be bad for the whole world, but it'll be particularly bad for Asia, because Asia is the most integrated region in the world. So anything which affects that is going to affect all economies in the region.
So, Krishna, quantify the impact for us. I mean, we know that if Trump comes into office, we're looking at a 20% tariff hike for friend or foe, and 50 to 60% tariffs for Chinese products. How might that play out? Give us a sense of the actual impact.
So again, Haslinda, we don't get into actual number crunching at this point in time. We'll wait to see what happens in terms of the elections and what happens with policies after that. But the point we have made over the last year or so is that any kind of fragmentation, which means an intensification of trade protection and so on, has significant impact on the global economy, and in particular on Asia. And if you a few months ago, we had done a scenario analysis where I looked at two scenarios of what we call as friendshoring, where there's more trade between friends, countries, and the other where we have reshoring, where everybody gets more insular. And what we find is that in both these scenarios, in the long run, everybody hurts. In the short run, some countries may benefit from trade diversion, but in the long run, everybody hurts. And it's particularly bad when you think in terms of reshoring, because then everybody is more inward-looking, and that affects global output much more.
China is set to hurt even more with that 16% tariff. It's just showing nascent stage of recovery. How damaging might that be for China's turnaround?
So I think it's, any kind of fragmentation, intensification of fragmentation will have more inimical effects on China. And China, as I point out, a lot of trade in Asia is intra-regional trade, with China being the nucleus. So anytime China hurts, it's going to affect the whole region that much more. And you mentioned about, nascent signs of recovery, but that's again just 1 month, one data point, right? We still see the property sector not doing so well, whether it's in starts, sales, or investment. So the property sector is still in trouble. And until that problem is addressed, we can't talk about a sustained recovery in China.
How much of this could end up being a vicious cycle? Because a lot of the growth and support for China came also from demand from emerging markets. But these emerging economies could hurt if we see all-out trade wars around the world.
Of course, so this could be a vicious cycle, affecting all countries together. But what we find, here in China, because of domestic demand being very weak, prices in China are coming down, which means export prices of China are coming down. That's hurting countries in Asia, which have similar export structure, like Korea.
We have seen those October numbers.
So that kind of interlinkages between countries, that's why intra-regional trade is very important. So what happens to China has a very important bearing on the rest of the region, and vice versa. So this is, a two-way street.
Can some of the stimulus measures coming from Beijing right now offset some of those risks, especially coming the risk from the U.S.? So the stimulus measures announced so far, they all are in the right direction, right? Trying to prop up demand, trying to address the property sector. But what we've said is that this is not enough. And so, to be fair, they have not quantified the fiscal support so far. But what we've said in our analysis is that to rehabilitate the property sector, you need to invest, central government needs to invest about 5.5% of GDP over 4 years. One, to finish the stock of pre-sold housing, and that will also help resolve the developers issue, the viable versus non-viable and so on. So that amount of support is needed to address in a more durable way the property sector. And going beyond that, China also needs to rebalance its economy, pivot away from what's worked in the past, which is exports and investment-led growth, to more consumption-led growth. And those are areas where we are not seeing much by way of support measures as of now.
Krishna, to your point, China's share of global exports has actually risen since the trade war between the U.S. and China started. China has shown resilience. It's able to penetrate non-U.S. markets more and more. Do you see that building and helping China in its turnaround?
So that's a very good point you make, Haslinda. What we have seen is that there's been a shift in trade patterns in Asia. So China is exporting a lot more to emerging markets in Asia and elsewhere, and less so to the advanced economies like US and the euro area. On the other hand, the countries, the ASEAN economies, are exporting a lot more to the advanced economies like US and euro area. So the question, of course, is that a temporary change in trade patterns, or is that more permanent? That only time will tell. But so far, Asian economies are still doing well in terms of integrating into global supply chains and keeping their export shares.
You talked about how it's important for China to get its housing crisis sorted. I'm just wondering whether China can stimulate its economy out of a housing crisis.
So we believe that the big elephant in the room is the property sector, right? And that is the reason why confidence is really low, consumption is low, investment is low, so domestic demand is very weak. So if you want to get domestic demand going, you have to address the elephant in the room, which is to resolve the problem in the property sector. That's in the short term, but beyond that, more needs to be done to revive consumption demand in the economy. And that is to allow Chinese to save less and to consume more. That rebalancing, which we've been talking about for many years, hasn't happened. But now is the time to really pivot, because China can't rely on exporting away its problems, so exporting more.
What is going to be really interesting in Asia, especially going into next year, is this divergence that we're seeing in policy. We talk about China and the PBOC and, yes, loose policies. Here in Japan, going the other direction, we already saw some of the financial market turmoil that can cause with yen carry trades being unwound. How much of that is the IMF paying attention to?
So we do surveillance of all countries. We focus on Japan as much as we focus on Japan. And in terms of what we saw, the increase in rates in July, it was along the lines of what we had been recommending to Japan. And we said that that's important to make sure that inflation expectations get anchored at around 2%. But that any future increase in interest rates should be gradual and should be data dependent. So that's the kind of advice we've been giving Japan as part of our dialogue with the authorities. Governor
Ueda seems very determined to continue hiking if prices come in line with expectations. Are you seeing that right now? So it's in consistent with what we're telling them, that you have to see how data is coming in terms of inflation thing, and any kind of increase. But the data can be pretty mixed, especially if you're looking at real wages and it's going down and up and down and up. So there are both upside and downside risks to inflation. But the wage price spiral could be better than what we expect, or it could be worse than we expect. So the questions, there are both sides risks. The risks are up and down, and so that's why we emphasize there should be more gradual. Look at how the data is coming in, and tailor your response according to that.
You got to wonder how the central banks are also viewing what's happening in the U.S. We have several central banks out with decision next week, of course, at a time when the U.S. is hosting its election. What are the risks of a misstep for them?
For who? Sorry, could you just repeat that question?
For the central banks. The central banks out with decision next week. Is there a risk of a misstep?
So there's a lot of uncertainty right now, and it's not just political uncertainty, but all kinds of uncertainty. And so it's important to keep that in mind. In fact, if you look at communication from central banks, they all emphasize the fact that their uncertainty is a key factor in also, in their decision making. So that's something which needs to be factored in. And what happens, you're in a situation where the economic outlook could be divergent across countries. So in that context, decision making is very important to take into account all factors, including notably uncertainty.
How concerned should we be about lagged effects of tightening? Here in Japan, we saw bankruptcy soar.
So I think this is part of the monetary transmission, right? And, in the case of Japan, they're moving from a period of ultra-loose monetary policy to a policy where they're normalizing a monetary policy. So there is some amount of learning by doing. And that goes into the whole issue of look at what the data is telling you and be more gradualist in your approach towards raising interest rates.
What did Japan do wrong in July when we had all of that financial market turmoil? Could that lead also to confidence being hit in 2025?
I don't think Japan did anything wrong. it was a question of the fact that, you had Japan raising interest rates after a long time in July, and then the U.S. labor market came out differently. And so that led to, some turbulence. Also because the yen was the funding currency for carry trade. Those were unwinding. So the question was, when the yen was appreciating, a lot of the firms which were affected by appreciation, their stock prices were hit. But then markets recovered. So that was something which was a kind of a first time when you're moving from an ultra loose to a tightening thing, and that's something which markets should have expected. But the unwinding of the carry trade, and that kind of amplified the appreciation of the yen.
Krishna, you've been talking about a lot of uncertainties. What's the biggest risk for Asia and Asian economies in the coming year?
So I think in the short term, or maybe going even beyond the short term, I think the issue of geoeconomic fragmentation is something which we are really concerned about. Why is that? Because this is a region which is highly integrated into global supply chains, right? And you've seen the benefits of that. In fact, in our report, we talk about how much progress has been made in terms of lowering poverty and improving lives of people. Now, the question is, if that is on the base of a very integrated global economy, if there is more fragmentation, that's a big risk for Asia. And all analysis shows that any kind of intensification of geographic fragmentation, Asia risks losing the most. And of course, what happens to China and how China is able to address the problems in the property sector and its rebalancing of demand, that will have a key bearing on what happens to prospects for other countries in the region.
Krishna, thank you so much for that. Krishna Srinivasan, Asia and Pacific Department Director at the IMF. And of course, the Asia Trade co-anchor, Sharian, joining us. Thank you so much for that. Still to come, Donald Trump insists he's the clear front-runner in the U.S. election, despite polls showing a tight race. Analysis from Brookings Institution senior fellow Nicol Lee latest this hour. And Bloomberg TV would like to hear from you. We've put together a short online survey. Do scan the QR code on your screen right now to tell us what you'd like to see on BTV and other suggestions on how we can do better. Keep it here with us. This is Bloomberg. Welcome back. Intel CEO Pat Gelsinger says the company had a challenging third quarter, although it saw good operational results. He told us more about Intel's restructuring and the outlook for its AI accelerator.
We worked very hard this quarter to get this done. And the people actions, the restructuring charges, largely finished this quarter. So it was a challenging quarter that way. But to also deliver better than expected results if we eliminate those one-time charges, and to take our guidance up for Q4, I'm very proud of our team being able to do both of those this quarter. Some of the most difficult restructuring charges maybe in the history of Intel since our memory microprocessor decision almost 40 years ago. Getting that done and still beating results and taking the guide up. This was a very significant quarter for our team to execute.
Your AI accelerator did not get the traction that you'd hoped, and you won't be making the outline target of $500 million in sales for this fiscal year or calendar year. Why? Is it a use case issue that the data center operators aren't looking at it, or something else?
Yeah, two factors that we pointed out. One is that now we have Gaudi 3 coming out, so there's more enthusiasm for the next generation product that we're just starting to ramp now. The second one is the software. And the software use cases, the AI world has moved very rapidly and innovating very quickly. And the robustness and the completeness of the Gaudi software stack hasn't been as great. And it's an accelerator, not a full reprogrammable GPU. So that makes some of the software porting and optimizations a bit more difficult. Obviously, as we get more of that running on Gaudi, we solve the software problems. Okay. But secondly, then it's also to move to a complete GPU capability, which we'll be doing out in time. And that development effort is also well underway. So we feel we have a solid position.
Intel CEO Pat Gelsinger speaking with Bloomberg Technology co-anchor at Ludlow. Well, tech investors also cheering strong Amazon results, while Apple's forecast disappointed. Bloomberg's Avril Hong joins us now. Solid set of numbers from Amazon.
Certainly, and I think this speaks to this years-long effort by Amazon to cut, reallocate costs, and how it's paying off. I mean, you look at the three segments of the business, whether it is the e-commerce, cloud, or the ad side of things, it looks like a company that is humming on all cylinders. Cloud, as you know, struggled for a long time. See last year how it was record low sales growth. We're seeing how numbers there are looking pretty solid now. Ad business surging by double digits in terms of growth. And then you think about how its e-commerce side of things is also seeming to benefit from the streamlining of logistics operations. We have the likes of Bloomberg Intelligence showing and telling us that the margins seem to be the bright spot as it exceeded expectations. So I think to them, this looks like an Amazon profit story that has legs, room to run.
For how long? What's the outlook? We talk about cloud, e-commerce. Can those units sustain the growth we're seeing right now?
Fair question, but if you look at its projections for the current quarter at least, it looks like it does have some room to run on those legs. I mean, they exceeded expectations, whether it was profit or revenue expectations, but I think what was also worth highlighting was how it is setting aside $75 billion that's dedicated to capital expenditure. This includes for technological infrastructure. So you think about future growth, right? Not just what we're seeing in the near term, the kind of investment in data centers that's going to be needed to fuel the AI boom. And of course, when it comes to spending, big amounts tends to make investors pretty nervous. But as one analyst put it, Amazon has a pretty good track record in spending big in investments, but also delivering pretty solid returns. So this is a business that looks like it's seen a solid set of numbers, the outlook looks good, and then it's positioning for growth going forward.
So great return on investment, plus it's gone on some cost-cutting measures as well. The other one that we're tracking, of course, is Apple. And when it comes to Apple, it is the China story.
It is. I mean, we saw how that particular part of its business is missing on revenue expectations. And it's facing really intense competition from local players like Xiaomi and Huawei for its phones in that part of the world. But you're seeing also that it met the revenue expectations overall. But what really was the cause for concern, I think, was the outlook for this current quarter, because it is, after all, coming during the most important sales period for Apple, the holiday season. We're seeing how, there's cause for concern after two quarters where it kind of managed to turn things around after a very disappointing year. So that, I think, is what was the pain point for investors. I mean, you look at iPhones, that growth actually did come through in all geographic segments, including in China, but you kind of unpack things a little bit more is when you see, the products such as wearables, accessories, even though there were some upgrades, it hasn't really translated into material impact on sales. So that is what I think really raised eyebrows.
Yeah, so it is in the end about AI. How will it play out for Apple? How will it play out for Mac 7? It's been pretty mixed.
Yeah, I mean, we saw what happened with Meta and Microsoft earlier in the week. But for Apple in particular, I think you heard during the call, its executives seem all in when it comes to Apple Intelligence. But those features are going to be rolled out over time. So for there to be any significant upgrade and impact on earnings, that's going to still take some time.
Avril Hong, thank you so much for that update. Still to come, Kamala Harris zeroes in on Donald Trump's latest comments about women as the election race enters its final few days. We'll discuss the issues of the Brookings Institution next. Keep it here with us. This is Bloomberg.
The markets are starting to sort of appreciate maybe a clean sweep and sort of preparing for Trump coming in. Again, our job is to kind of sit back and say, okay, well, what will do well regardless?
I know the conventional wisdom is and consensus is that right now a Trump presidency is better for markets. And I think the immediate reaction probably will suggest that because of lower taxes, deregulation. But as you look out to 2025, picture is not that clear.
The global manufacturing cycle is going to struggle under that regime. And we certainly saw that in 2018. After the first and second round of tariffs, you did see pretty significant decline in manufacturing activity, which that is, a bit dangerous and, warrants caution at the moment.
The world is more complicated now than it was before. Much more interconnectedness, much more challenges across that interconnectedness. So the risk is if Trump's in power and brings that same volatility or even maybe worse, what does that then do to the region? So I do think countries and companies are preparing.
Insights from our guests this week on the U.S. presidential election race. Now, Donald Trump and Kamala Harris have both been on the campaign trail in the western battleground states of the U.S. As the latest poll suggests, the contest remains incredibly tight. So can either of the candidates make a difference in the final days of this unpredictable election? Well, joining us now is Brookings Institution Senior Fellow Nicol Turner-Lee. Nicol, good to have you with us. Of course, we heard Trump saying that, he's poised for a runaway election, barring fraud. I mean, what do you make of his statement, bearing in mind that it is a tight race?
Well, I have to tell you, it is so tight that a near tie is even existing in some of the swing states where Harris had some lead over Trump. So I do think this is going to be a nail biter, and one in which many of us are going to be looking at trying to ensure, most importantly, that whoever does leave out of this race is able to secure, the appropriate process by getting the electoral college votes as opposed to the popular vote. It's going to be a nail biter. It's going to be a nail biter.
The thing, though, Nicol, what Trump says actually sets it up for perhaps a dispute post-election, no?
Yeah, it does. And I think many of us are really thinking that this is going to take a while to settle. Even when we all go to the polls and the votes are cast, you've got early voting ballots that still need to be counted. You have, people that have absentee ballots that have to be counted. You have people who are going to be coming in on election day. I think we need to be setting up for a pretty long period where we're going to actually get a ballot count. And then I think we may, depending on which way the election goes, really set ourselves up for some litigation potentially.
How do you think the race has unfolded? How do you think the two candidates have played this?
I think the candidates have played it quite well, in particular when it comes to trying to cast their character out to the general public. I think it's actually confirmed among decided voters who each candidate is and what issues they're going to put at the top of their priority list. I'm thinking at this point that most folks have made up their mind, which is why we're seeing just a groundswell of early voting among Democratic and Republican voters. But I do think, what is still unsettled is whether or not people are going to go to the polls with their conscience or they're going to go to the polls with their pocketbook. And I think that is going to be an issue that we're going to find out, next week. But, I think that's where the lines are going to be drawn in the sand. Are we going to have this an election of character, or is it going to be one based on, economic livelihood? And that's where most people find themselves sort of split and torn between the two candidates.
What's your hunch? What's the feeling on the ground?
I think it's hard to say. I mean, Harris has definitely outperformed in the markets in which she's actually showing up. We've seen the celebrity star power that's coming alongside of her, that's giving her a lot of credibility. We've seen an increase, much like we saw in the recent rally here in Washington, D.C., of young people who are sort of decided on where they want to land. On the flip side, we've seen Trump, come out with some really raunchy stuff, as well as the people around him or the people that are listed to support him or rally for him. It's still undetermined whether or not that's going to have an impact. For example, what was said about Puerto Rico and among the Latino voters. I think, again, going forward, this is where the lines will be drawn. It's going to be drawn between the differences in their policies. It's going to be drawn in the certainty around the economy. And it'll be drawn, I think, in the end around the character that they've presented to the American people.
Well, it does look like when it comes to Trump, Elon Musk is playing a big role in it. We've just seen Elon Musk offering $1 million to voters who sign a petition in the swing states. How do you assess such moves by Elon Musk?
I think it's interesting. I mean, I think we should expect it. We've seen the type of characters and the type of allyship that the Trump campaign is able to get in their corner. I mean, Mr. Pillow, I think, was one guy, and now Elon Musk is on the road with them. I mean, I think he brings a certain livelihood, I think, to the generations that are particularly interested in the future of technology. I think he also brings a certain energy and enthusiasm to the campaign that perhaps the Trump team was missing. But, there's still talk about whether or not it was legal for those donations to go to prospective voters and the extent to which, cash and that type of influence is going to change the minds of people. Again, I think most people are pretty decided, which is why these races are tight, very tight and neck to neck. It'll be interesting to see if that actually persuaded people to actually change their vote or to confirm that what they're actually going to vote when it comes to Election Day.
It's also interesting when we talk about disinformation going into this election. There's been so much concern about that. The U.S. intelligence itself has said that it is concerned when it comes to disinformation from countries like Russia, like China. What have we seen?
I think that's interesting as well. I mean, as we get closer to the polls, we get more public knowledge about many of these attacks. I mean, these attacks are happening from foreign operatives, but in a very particular way, because I think in the previous campaign when Clinton was running against Trump, we saw a lot of disinformation that actually occurred, but it was more under the radar, cloaked in foreign operatives that were not necessarily here in the United States. I think day by day, we're seeing different attacks domestically, whether that's through agents that are being coerced through these foreign operatives, or we're seeing attacks on phone banks. I mean, that was the most recent announcement that we had in terms of misinformation, disinformation. I mean, I think it's going to be interesting going forward. I think this particular campaign season that many state attorney generals are much more prepared for any type of, litigation pursuit of the integrity of the vote. And I also think more people are aware and educated about this issue. Doesn't mean that it's not going to happen in the next 3 or 4 days, right? But I do think you can identify it better, right, going forward. And the news has done a great job, like yourself, of making us all aware of when these things are happening.
So, Nicol, are you then saying that disinformation isn't likely to sway the votes too much? After all, like you also said, most voters are decided.
I think that the people who are still maybe in the wings trying to figure out which way they should go, of course, any type of messaging that it comes across social media platforms or where artificial intelligence is manipulating and extracting images, sort of making celebrities, for example, deep fakes to persuade people not to go to the polls. I think that's going to obviously happen. And it's going to happen in ways that we may not even be able to quantify it. But I do think both candidates have a vested interest this time, right? And really having an informed democracy. I have watched this over and over again. And to my surprise, both candidates have used the internet, used social media in their own particular way. I mean, the Harris campaign has used it successfully for fundraising, the Trump campaign to sort of counter any message that's happening on the other side. I do think that there's a vested interest with the races being so tight in everybody going to the right polling station. And so I'd be surprised if this actually has the type of manipulation before the election day, because I do think that there's going to be a lot of worry that every vote is not necessarily counted, but also registered across the United States.
Nicol, we've been talking at length about AI and technology. Give us a sense of how the policy might play out if it is a Trump or a Harris administration. We know that when it comes to Trump, perhaps he'll take a lighter touch when it comes to, technology and emerging technologies as well as AI. What's your take on that?
Yeah, I've been talking about that. I mean, I think I'm talking about it more than the candidates, in all honesty, in terms of where they're actually going to fall. Each of them have given us a glimpse into their technology policies. And I think that's going to give the market some certainty, too, as to where they land. I mean, it's really clear that the Biden-Harris campaign has set a standard when it came to the executive order, when it came to trustworthy AI. In fact, just yesterday, they celebrated the 1-year anniversary. So I think that has made a mark and survived Congress for the last year. Now, whether or not it lives, if we do not have a Harris victory, is going to be something that we're going to have to consider. The Republicans have already put into their agenda that they're going to repeal the executive order. They've also suggested by who is standing around them, like Elon Musk, the certain decisions they're going to make to append the existing leadership, like Lena Khan, who's running the Federal Trade Commission. I think at the end of the day, many of the policies that we're going to see that are going to be set in stone are going to come after the election. This was a short window, right, for both candidates to come out with, I think, a very detailed policy plan. In fact, as we've heard, Harris, who jumped into the race much later than Trump, she's sort of been responding to much of what voters have been asking her for. So I'm giving, election, perhaps some litigation, and then some policy before Inauguration Day, right? They put out the plans, but we will know more specifically on where they're going to land, I think, after the date in which we actually decide who is the actual winner.
Nicol, I also want to touch on foreign policy. When it comes to foreign policy, especially to do with Asia, India is imperative as a counter to China. How do you see this playing out, whether it's Harris or it is Trump?
Well, I'm hoping in particular that the United States will look at countries like India or other global majority countries like Africa and Latin America, the Caribbean, and really pay attention to what role they're going to play to enable the market, like the chips market when it comes to semiconductors, how they're going to be able to enable connectivity or artificial intelligence systems. We definitely, based on where we stand with China, have to be very sensitive that these countries have to play a role when it comes to our allyship, particularly when we're talking about national security concerns, as well as, the production and supply chain economy. I mean, we've seen this play out before, and my hope, in all honesty, is that when we do get down to the policy grid, that we will ensure that these nations play a significant role, not just on a humanitarian sense, but they're really part of our global development and help us with our competitiveness and our front when it comes to China and Russia.
But the thing is, we can see perhaps a reshaping of international trade no matter who comes to power, given that China, for instance, is a bipartisan issue.
Yeah, and I mean, Trump has made it very clear that if he were to be reelected as president, that he's going to revert back to his, anti-China policies. And particularly, he's going to start to tax all of the, imports that come into the United States in a way that could have a significant impact on the American consumer. I think we have to pay attention to that. I think Biden, suggested very much that China needed a new relationship when it came to trade with the United States. And much of that has played out. But we also know that there's not a lot of cordialness happening within the continent itself right now. So I think each person who gets into office, whether it's Harris or Trump, are going to have to rethink and really dig into what our relationship with China is going to be. Will it be continuously adversarial, or will this be a relationship of open opportunity? And that's why I think the two really differ when we begin to talk about trade, technological innovation, regulation as to the degree to which we're going to put more or less, and taxes, ultimately. Those issues, in addition to, I forgot to say, immigration, are going to play some pivotal roles as we try to rebuild the economy, quote unquote, and get America back to a space where we can, again, just live in civility with economic prosperity.
Nicol, great insights. Thank you so much for that. Nicol Tanner-Lee, Senior Fellow of Governance Studies at Brookings Institution. Well, for more on the U.S. election and how it could impact India, let's bring in Bloomberg government reporter Sudhi Ranjan Sen in New Delhi. How is Delhi looking at this election, Sudhi?
Well, I mean, New Delhi, like any other country, is watching it very, very closely. In fact, every move or every statement that comes out of President Trump or President Kamala Harris is being watched carefully, is being analyzed carefully. So it's like every other country, India is very, very invested, so to say, in the entire process, and is watching out very closely to who gets to the White House.
So India could chart a new course after the election?
Well, you see, the India-US relationship, so to say, is very strong. But at the same point of time, it is very top-driven. The institutional stickiness, so to say, is still some time away, still some distance away, where the institutional stickiness between the two countries become even more stronger, and therefore whoever comes to the White House really doesn't matter. That's not the case. A lot of driving will have to be done from the White House, from the Prime Minister's office. On top of that, there are irritants in the India-US relationship. As we have seen, India has been accused of carrying out, an assassination attempt in the United States, allegedly, and similar allegations made by Canada, another Five Eye country. So these irritants are there. It'll depend, a lot will depend on, in a way, who comes to the White House next, what kind of view is taken. At the same point of time, we have seen strong statements coming both from India and America on issues like religious rights, press freedom. So these irritants are there. It's not that these are not manageable, but the issue is how does the next administration view all these things and how manageable these are. Those will be the critical issues.
Sudi, how significant are warming relations between India and China? How might that impact relations with the U.S.?
Well, obviously, India is a very critical piece in the entire policy to counter China, whether it is military, in military terms or in terms of the economy. India-China detente, so to say, was necessary because you had hundreds and thousands of troops on the border, which is not a very healthy thing, not a very safe thing to happen. That said, what we understand from the ground is that the trust with China is completely gone. Therefore, there should not, the, so to say, warming of relation between India and China to a level that it is it's a working relationship. There are no situations where, war could just break out, all of a sudden because of some misunderstanding. That is averted right now, but the trust factor is not there. And that, if that be the case, then it should not be a major irritant or a major issue in the US's policy, because India continues to, seek out the United States for technology, for everything from semiconductors to jet engines. So that part of that relationship, that pillar of the relationship will continue.
Sudi, thank you so much for that. Bloomberg government reporter Sudi Ranjan Sen in New Delhi. Now in the markets, of course, traders mulling the earnings out of Meta as well as Microsoft. Disappointing somewhat, though. Intel was positive. So U.S. futures currently pointing to a higher open, down 0.2%. NASDAQ futures also in the positive, bearing in mind that both benchmarks closed about 2% lower on those earnings season. In terms of the dollar, it is pretty steady right now, putting some pressure on Asian currencies, including the yen, which, by the way, has given up all its gains for the day. And of course, Bloomberg TV would like to hear from you. We've put together a short online survey. Scan the QR code on your screen right now to tell us what you'd like to see on Bloomberg TV and other suggestions on how we can do better. Keep it here with us. This is Bloomberg. Well, the buzzword is uncertainty. Uncertainty over next week's U.S. presidential election is keeping traders on edge. Let's discuss how they're positioning ahead of the vote with Bloomberg MLive strategist Mark Cranfield. Forget about next week. It is about today, the jobs report.
Yeah, it's probably not as huge as it might have been. We've already seen the ADP report this week, which was pretty strong. So people have already got a sense that the employment situation in the States is nowhere near as dire as they feared just a few months ago. That was partly the inspiration for why the Fed cut 50 basis points in the first place, was that it looked as though the jobs market was deteriorating quite quickly. We had a 4.3% print on the unemployment rate. That scared everybody. It since came back down, and we've seen the non-farm payrolls numbers started to get a little bit stronger again since then. So now it's beginning to look like a bit like overkill. Why did they do the 50 basis points in relation to the jobs market, certainly, anyway. So, and the fact that we have next week, we have one or two big events next week, which kind of overshadow. We will certainly get reactions. There's no doubt the market will respond. And the way that we're set up, probably a high number in terms of a solid number for the jobs report. Actually probably do more damage than anything, because the bond market is very jittery at the moment. You can tell that the reversal, in the end, October was a very bad month for treasuries after a long period of yields coming down. So people are clearly edgy. Right now, they probably don't want to see too strong a jobs number.
people are edgy, the bond market's kind of like in tenterhooks. Some are saying that we could get to 4.5%.
It doesn't look very far away at all. I think you've had people on this program, or like Mr. Yardini, already saying that kind of thing, and we're not far away at all. Just look what's happened to the UK gilts market this week. We've had the UK budget, much anticipated, even though the numbers were pretty well projected beforehand. People had a very good idea of what the UK Chancellor was going to do. The bond market had a riot. We saw yields go up 20 basis points in one day. In the long end of the curve, that's a very substantial move. It's exactly the kind of thing you could see in the Treasury. We've seen it before in the Treasury market. It's exactly what we could see next week if people get a sense that the fiscal situation is deteriorating too quickly in the United States. People are not being responsible with the gap between spending and revenues. So what the UK we saw this week, the bond vigilantes are all over it, and they've started, and it could spread to America next week.
So 4.5 is possibly a gimme. The question is 5, right? Whether that's a possibility, given that it's going to be a tight race. Where might yields land?
It's not just even that it could be tight, it could be indecisive. That possibly one of the worst things that could happen for financial markets is that we get contested results. We get a dragged out situation where we don't have a clear winner. We may get clearish results in terms of the Congress and the Senate, but if we don't get a clear result in a presidential, that will be overhanging. That'll be uncertainty that people don't really want, and that may make the situation worse. But then, of course, investors will want to see the hard numbers. How much is the next government in the United States going to spend? How are they going to put that in terms of what parts of the economy are going to benefit from it? Where is it going to go? How big are those numbers? And that's what the rating agencies will be looking at. You can see they're already scrutinizing all the major countries around the world. They recently put France again on watch negative. So clearly, there's a nervousness about these jet to GDP ratios all around the world. And the United States is top of the food chain. If they put a foot wrong, everybody will be following. So that's what we'll be watching very closely. That will take a few months to play out, but we might get indications in the next few weeks of which direction it is going.
So until we get those indications, keep your powder dry.
I think what people will be doing is they'll be looking selectively. They might go to corporate bonds, for example, where there's more visibility. It sounds surprising, but if you look at the way that spreads have been tightening in the corporate market, people can see that there are major companies in the United States making huge revenues. They're covering their cost base with such a good cash flow situation that they're very stable. They're not under any threat of having bond ratings downgrade, so they can issue bonds freely at reasonable levels at the moment. Yields have come down a fair bit. So the corporate space is almost becoming a safer situation than the potential volatility in the government space. It's unusual, it happens from time to time, but that's what people might be saying, okay, government bonds look too dangerous for the time being. I'm going to shift more to these very strong corporate earnings places.
Is there a sense where the dollar is headed?
Well, coming into this week, the people in the market seem to be fairly confident that the US dollar would have a strong run through the US elections, particularly against emerging market currencies. We've got a report this morning on Markets Live talking about the high volatility Mexican peso, Korean won, some of the other emerging market currencies which seem to be at risk. But along comes the Bank of Japan, changes the situation quite a bit, not completely, but what Governor Ueda had to say yesterday was effectively defending the yen.
All right, Bloomberg M Live strategist Mark Cranfield, that is it for Insight. This is Bloomberg.